Hi guys, welcome back to my Business Mathematics for UiTM channel. Okay, last time we have looked through some of the introduction on what it means by installment purchase. So this time we're gonna look at some of the important terminologies that will be used in this topic. Okay, so if you look through in the slides, these are some of the common terminologies that will be used in our discussion for this topic. The first one is what it means by the cash price. So in this case, the cash price is actually the cost of item listed at the time of purchase. So which means that it is the price of the goods itself. Okay, so bear in mind in this situation, so you are looking at the cash price is the amount that you have to pay if you want to buy the product cash, okay, without any installment, without taking any loan and so on. Okay, so normally the cash price is the price that is listed on the price catalog, okay, the list price. Okay, and then the second one is what we call as the interest. So the interest is basically the same as what we have learned before. This is the amount that we get when we charge an interest rate on the balance, okay, on the balance. So what is the balance? So in this case, sometimes we call it as the original balance, or sometimes we just simply call it as balance, and we denoted it as B. Okay, some text may be using OB to represent original balance. So either one is okay to be used. You can use B or OB to represent original balance. So basically the original balance is simply the amount left after the deduction of down payment from the cash price. So which means that if you take the cash price minus the down payment that you have to pay, then the amount left is what we call as the balance, whereby the balance will be paid by installment, and the balance also will be charged an interest, okay, an interest amount on it, right, depending on the how much is the interest rate. Okay, so in this case, if you want to look if you want to give an example on the original balance, let's say you are buying a product that costs you 1,000 ringgit, and then you have to pay a 10% down payment, which means that 10% down payment is being calculated based on the cash price. So that means 10% of 1,000, which is 100 ringgit. So the difference is that 1,000 minus 100, you get 900 ringgit. So that is the original balance. Okay. So once you know what it means by original balance, the next thing that we need to know is the term periodic payment. Periodic payment, or denoted as R. So this is the amount of installment paid every week or month, okay, depending on the way of payments, either it is weekly basis or monthly basis. Okay, sometimes in the exam, in the question paper, they didn't mention it to be periodic payment, so they just mentioned the monthly payment, for example. So this is the same thing. So when we talk about weekly payment or monthly payment, this refers to the periodic payment, or denoted as the capital letter R. The next one that we have is number of payment, or small letter n. So this is similar to what you have done previously in the previous topic of annuity. This is simply the total number of payment to settle the balance plus the interest. So let's say you are buying a product, and then you pay a down payment of 10%, and then the balance you will pay by installment for 12 months. So that means the balance you will pay by installment for 12 months. So in this case, the number of payment that you have to make is 12. That is equivalent to 12 months. Okay. And lastly, in this slides, we have the term that we call as installment price. So basically the installment price is simply the total amount paid for the item bought, including the down payment. So which means that if you pay monthly R for n number of payments, so you have to multiply R with n, and then you also have to include the down payment that you have paid earlier. So this is what we call as the installment price. So please be aware on the difference between the cash price and the installment price. Cash price is basically the amount that you have to pay if you want to buy the product cash. Installment price is the total amount that you have to pay in order to buy the product by installment. Okay, so that is basically some of the terms that you might want to master, want to know. Okay, you might want to give more understanding on these topics so that you can easily answer the question asked in the exam or quizzes. Okay, so the next slide give you some relationship of all the terminologies that we have just discussed just now. Okay, for example, the cash price, that is CP, is also equivalent to the balance, the amount of balance plus the down payment paid. Okay, and you can also find the periodic payment either monthly or weekly by using the formula B plus I divided by N, where B is the balance and I is the interest divided by N, the total number of payment. And lastly, for the installment price, okay, for the installment price, you can use three formulas. Okay, you can use three formulas. Okay, in this case, that means just choose whichever formula, formula that have the information available. For example, if you want to find installment price, you can use cash price plus the interest paid, or you can just use balance plus the down payment plus I, okay, the interest. Or if you don't have the balance, you can also use the formula Rn plus Dp, where you multiply the periodic payment with the total number of payment and then plus with the down payment. Okay, so that is basically some of the important items that you need to know under the topic of installment purchases.